we're seeing some massive moves from markets. So in today's weekly SMC outlook, I'm sharing my exact trade plan for the DXY, the euro, the pound, the dollar versus the Swiss franc. We've got the S&P 500, gold, silver, WTI, and Bitcoin. We have a ton to cover today, guys. So let's not waste any time. Be sure to watch this video through to its entirety though, because there are a ton of details in this one. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So guys, the DXY here, daily time frame, in fact, the last few weeks, what we talked about here was the fact that a couple of things. One, the DXY had lost this area around 100, okay? So this was significant. This is a trend line that goes back over a year. We did see a breakout here recently. We had FOMC up here, and that triggered a pretty aggressive move lower and also a failure right there at support. So since that failure, we just saw the market going sideways here, holding on to this 2026 trend line down here. And once we dropped below it, the key point there was that we were below resistance. Okay. In fact, we were below this resistance here and also this one up here. Now, since that time, we did get some movement here on Wednesday, finally some follow through out of this range. And we are seeing the DXY now find support at 98.5 or thereabouts, which is another area that I talked about for really weeks here for this market. Two reasons. One, we obviously have the low back here. And two, though, we have this imbalance back here that before last week was unmitigated. So now we've seen the DXY tap into this area, wick below this low right back here into this, what was an unmitigated inefficiency. So the question now is, do we get a bounce back here toward this inefficiency next week? Or does this level simply fail? And the jury is out there, guys. What I said last week on Thursday was that given the look of this candle, I said, if we close Thursday's candle or Thursday's session strongly above here, then that could trigger a bounce back here toward this inefficiency. Okay. Now, so far here on Friday, we are holding above, but you can see just barely. Really, the past 2 days, the DXY has been completely sideways following that Wednesday drop. So the jury is out here, guys. There's nothing here to make me think that a move higher next week is likely. Okay. And at the same time, the market is holding on to this support area. So this is once again kind of a wait and see moment here for the DXY. And in fact, following Wednesday's move, really a lot of times when you get an aggressive move like this here, a lot of times the market does spend days or even a week or two digesting this, especially when you're in the US summer months like we are right now. So that is certainly one thing to keep in mind as we move into next week. But the bottom line here for the DXY is you've got this area right here around 98.7 as key support. You then have all these lows back here at 98.5 as resistance. So for now, guys, we are locked here in this range. Like I said, I wouldn't be surprised to see the market spend a few days here digesting this between those two levels before we possibly either get follow through to the downside or the market reclaims some significant levels. Now, let me be clear. Okay. Technically speaking, structurally speaking, this market is still bullish. And the reason for that is back here, we had the highs, we broke above this. This is the protected low. So really, as long as we're above this area down here, technically this market is still bullish. Okay. So you've got to be careful of that. Now, in order to see follow through to the upside, really this market would have to take out 100. Okay. We have to see the DXY back here above 100 to really confirm that a bottom is in place, because until that time, you do have the break below this trend line here. Again, also that 100 level. So really this is a downtrend here in the short term, but overall within this structure, or really I should say the larger structure here, is technically still bullish. Okay. So just keep that in mind. But for now, going to next week, 98.7 is support and 99.5 is resistance. Okay. So with all that in mind, let's move along here to the EURUSD. And if you want to see exactly how I trade, in fact, if you want to get my exact strategy, click on the link right here below this video. That is going to be a completely free SMC strategy showing you exactly how I trade every single week. Click the link, enter your name, email address. You will be given completely free access. So looking at the euro here, we are seeing the market move into resistance. We talked about this last week. This red box you see right here, this is basically an inefficiency from back here in May. So we had displacement back here. We saw this mitigated somewhat with this high. However, there was still a lot of inefficiencies back here that needed to be mitigated. So far, we saw the euro tap into that last week. Now, the key for this market, though, is going to be the fact that internally, and stay with me here, internally, this market gave us a change of character. The reason for that is that back here, right, you can see these lower highs and lower lows. This right here was a BOS. This was the protected high. We are now above this. So technically speaking, okay, in terms of this structure right here, we have the market giving us a change of character. Now, here's the key though, is that this right here, okay, this high and this low and this move last week all of this right here is internal to this larger structure, okay? So the key for the euro right now, and I mentioned this last week, but this BOS right here means this is the external protected high, okay? This high up here. So really we could call this an external high in the sense that everything in between here is really just internal and just a range bound market. Okay, so that's important to keep in mind. So yes, the market is showing bullish strength. We are seeing the rebound out of this area here, which we talked about at length. This was a confluence of support back here, right around 1.15. So it is looking bullish in the short term. However, you've got to be careful just because if we look here at this high, okay, this external high up here, down here to this external low, like I said last week, what you'll notice is that this area, okay, this dark green area right here, this is optimal trade entry. This is often where markets reverse. It doesn't mean that it will, but this area right here often is the place where markets reverse following a push into inefficiencies like this one back here, okay? So just something to keep in mind. Now, in terms of, what would trigger a more aggressive move lower, because right now we're just seeing the market go sideways, would be a loss of levels like this back here, these highs. So if we were to see it, lose areas like this and break trend lines like this down here, then that could start to look more bearish. But as of right now, guys, there is nothing to short here. Okay, absolutely nothing to short here because we are seeing the market break out from this and really just go sideways here for the past 2 days. Okay, and in fact, if we go to a 15-minute time frame, you can see really that it has been very sideways on Thursday and Friday. Okay, so you look at this here, we've got basically these highs up here. Okay, and you've got these lows down here. So even internally, there is nothing here to signal a change of character. Okay, because even this back here, this was way too tight for me to consider. And this high over here did not close above this one, right? We did not close above the high. So therefore, all of this right here is just internal, all right? So keep that in mind. Yes, we could see a pullback right now, but there's nothing even on the 15-minute time frame giving me an indication that a local top is in, okay? So just keep that in mind for now. But for the euro next week, basically, you've got 116.70 as support. You've got 117.10 as resistance. And then beyond that, if we get above these highs up here, then you're looking at a pushback here toward these highs, possibly that protected high, that external high up there around 118.50. Key support, though, on the way down, 116.22. If we lose that, I think it starts to look a little bit more bearish here for the euro. All right, so let's move on now to the pound GBPUSD. So we also talked about this one recently. And what I said there was that these highs were going to be resistance. Watch for sellers to come out and defend this. And so far, that's pretty much been the case here for this market. So really over the past 2 days here, Thursday and Friday of last week, you can see where the market found resistance here on Thursday, wicked above it on Friday. There's nothing here to short, guys. There's nothing here that makes me think that we have a top or even a local top in place. There's nothing lower time frame that gives me that indication. Right now, this is an uptrend. Okay, so buying dips on pullbacks is the way to go. However, you've got to be careful now that we come into these highs, right? We could see the market push into the top of this channel, yes. However, longing into highs like this back here is always a bad idea. So this is another market. I mentioned this last week with the euro too. If you were going to long this market, right, this was the area to do it. We talked about this at length. Okay, we had this trend line back here. We saw the pound actually close above it. And you can see what happened over the next few days, right? The market held on to this level right through here. So if you were going to buy this, this was the area to do it, right? Not up here, because now we're coming into resistance. And like I said, even if we get above this horizontal, you've got the top of this channel right around 1.37, maybe just above, that isn't too far away from current prices, okay? So I'm not bearish on this market, certainly not, but you got to be careful as we come into some of these highs and also the top of that channel. Okay, now one really interesting view of the US dollar is going to be the dollar versus the Swiss franc. So we talked about this trend line here that goes back to 2025. So this is basically mid 2025 back here. And what you can see here is that we did break out from this. Okay, so we got the clean breakout back here. And so far we've had the market come back here and retest this as key support. Now, what you'll also notice is that we also have an ascending channel off of these lows down here, these lows here, this one, and this one. So really clean channel. And you can see where this intersects with that trend line over here around 0.795. So for this market, here's the deal, is that there's nothing that tells us that the market has to test all the way over here. Okay, we don't have to test this channel support. And this test right here is significant and is, key support, right? So now you've got to look at the fact that we have this imbalance back here for this market. Wednesday's drop certainly created some inefficiencies here for this pair. So that is one reason why next week we could see this market give some relief up here into this area. However, from there, there's also the chance that we come back here into these lows, possibly back here into this mid-range, right, of the low to the high, and then come back here, test this, and then move lower, possibly sweep this low, or at least test this low down here in this region. So this is another reason too. The look of this market, guys, is another reason why I think too, given the fact that we're in August going into September, US summer months still pretty slow here, I think there is a case to be made that the US dollar and pairs like this here could just possibly go sideways here for another few weeks. Okay. I know that's not what people want to hear, but really going into September, I wouldn't be at all surprised to see something like this. Like this is your range here. And then what happens from here, whether we get the market actually, giving us something constructive to play, right, for continuation of this channel, or if we break down from here, that's what's going to be key. Okay. But I wouldn't be at all surprised to just see this market go sideways here for really the next week, 2 weeks, maybe even 3 weeks to digest what happened on Wednesday. Okay, but ultimately for this market, you can see where again, 0.795 is going to be a confluence of support down here. You've got resistance coming in up here in this region. And if I just, before we move on, if we turn on visible range here for a second, what you can see is that the highest volume point here for this market is going to be this horizontal right here. So what this means is that the highest volume, okay, within all of this congestion here, the highest volume occurred right here at 80.88, okay? So that is going to be the level to watch, right? That's going to be resistance to where if we see next week a mitigation of this imbalance from Wednesday, this is going to be resistance and you've got key support down here. So even though this market, this pair could be sideways for the next few weeks, if you know that this is now your range, right? So range resistance, range support down here. If you know that, then there could be possible opportunities here for this pair. Okay, so let's move along now to the S&P 500. Now, this one will be pretty quick, guys, because really structurally, the S&P 500, I don't see a lot going on here other than the fact that we have these highs back here that we've talked about. We've got these highs. We broke out of this range. We saw expansion out of this range. And the concern now is that this market has been following the late 2021 fractal for the past 18 months. So I've talked about this for the past few weeks, and we talked about it back here when the market was going sideways. So this becomes really apparent if you turn this into a line chart and you compare it. So this white line here, guys, is basically 2021. And this up here is December 2021. Okay. This portion right here. Now, what you'll notice is that back in 2021, okay, in December, right, late 2021, we had the market do the same exact thing. Went sideways, broke out, expansion out of it, and then that failed. So the question now is, are we going to continue to follow this? So far, you can see where we have, right? Last week, the S&P 500 once again started to fall lower. And I actually mentioned this on X, that this right here, the fact that we took out this high up here and then closed below, that this right here was bearish, okay? This was bearish closing back below. And since that time, it hasn't been an aggressive sell-off, but anybody shorting up here has made money, okay? So all in all, guys, I mean, it still looks a little bit dicey here for this market. Now, I will be the first one to say that right now, this is not an aggressive sell-off, right? This isn't a complete unwind like you would see possibly at a top. However, at the same time, we are still following that 2021 fractal. Now, nothing says, when you look at this fractal or this analog, nothing says, guys, that the market has to follow this. Like, this is not a call for the market to do this over the coming months and really a year, right? There's nothing here that says that this is likely. This is simply just an observation that the price action is mimicking what happened back then. So look, we could follow this down, or the market could just, pull back here into this area and then just continue higher, right? So again, this is not a guarantee that this will happen. It's just an observation. Okay. But I think what will be key for this market here is areas like this. Now, if we were to see this market continue to trend lower down here toward this open gap, and if we go back here toward visible range, right? What I would say is, guys, if we start to lose areas like this right back here, okay, so right around 7,400, if we start to lose this, then this starts to look more problematic for this market, okay? And we're nowhere close to that yet. But this area down here, basically this open gap, and then this POC right here, this point of control, if we were to start losing areas like this and just starting to, chop right through this, and also trend lines like this down here, guys, that would start to look a lot more problematic for this market. Okay, like I said, we're not there yet, but this is the area to watch down here. It's going to be key support until proven otherwise. But if we were to lose this, in my opinion, then the 2021 scenario starts to look a lot more likely. All right, so next up, let's take a look here at gold XAU USD. Now, this market is looking bullish after breaking out from this. So what we talked about in recent videos was the fact that really the market had to stay above here, the yearly open. Also, this trend line here off the highs, it stayed sideways for about 2 weeks, and then we finally saw a breakout last week. So what I said in a recent video was that as long as we held onto a breakout above these highs, we were looking at a push up here into this area around 4,600. Now, not only are we getting that, but so far here on Friday, there are still a few hours left in the session. Keep that in mind. But if we do see gold clear this area up here, then we're probably looking at a pushback here toward the highs. Now, before we move on any further, guys, if you want to use the broker that I trust the most, then check out the link right below this video. That is going to be a link to IC Markets. With that link, you will get a 100% deposit bonus up to $1,000, plus additional deposit bonuses of 50% up to $25,000. And on top of that, if you deposit $10,000 or more, I will grant you lifetime access to our Discord group and also the full SMC course. So check out that link below. If you don't see it there, check out the description of this video. All right, so gold right now, guys, if we hold above these highs from back here, right into Friday, hold above this becomes new support. As long as we can hold this early next week, I do think that we could get a push up here into these highs, possibly around 5K to fill this imbalance back here, okay? So that's really the game plan for now, very simple. If we were to start losing this support though, and then pushing back here into this area and taking out lows like this, of course, that would start to look more bearish for this market, okay? But as long as we hold on to this area back here next week, then again, I think the target here are these highs back here around 4,900, possibly up there into the 5K imbalance. All right, so silver next, guys, XAG USD. Very similar. What I talked about last week was this right here. So we had the possibility of this being a liquidity sweep. And what I said there was that as long as we get above these highs, then we could see a push back here into the yearly open around 71.33. And so far, that was the case, right? We held above it here. We pulled back into these highs and closing prices. And then from there, we are pushing higher back here toward that yearly open. Okay, so all in all, anybody that followed that plan would have made some nice money here for silver. So guys, this is going to be a big test because this is the yearly open for this market. You can see back here, we've got the lows back here. We've got this low, we've got these highs. And so this area around 71, 72 is going to be a massive test for this market. Now, if we were to see it get above here and hold above, then that could signal a larger push back here toward this imbalance, which this one back here is huge, guys. I mean, right around 82, 84. This one is massive here for silver. So this could be, right, a much larger target if we hold above the yearly open around 71, 72. That's going to be key though, because this is going to be resistance. And like a lot of these markets, guys, the time to get bullish here was either on this sweep, the confirmation of this sweep right here, or you wait for the market to get a sustained break above here, right? If you're longing this now into this yearly open, I think, in my opinion, that's kind of ill-advised just because, again, this is going to be a big test for this market. But all in all, looks pretty bullish right now from this market, higher highs and higher lows following the change of character back here. Okay, so next up we have US oil WTI. So guys, what we talked about in recent videos was that we had the pullback back here. So this was the big call that I made back here in this area. As the market was trending lower, I talked about how this area right around 66.7 could trigger a massive long back toward 90. That's exactly what we saw, right? So that was a great move, a great trade back here in this area. And then from that point, what I said a few weeks ago was that this consolidation, okay, so this consolidation right here off these highs and these lows look like a falling wedge. And we did get the breakout. We got the market closing back above this pivot right here, right around 78.70. And since that time, we have seen oil once again move higher. So again, anybody buying this would have made money. Now, last week, I talked about how this right here looked pretty bullish, right? And again, you can see breakout through here and moving higher. So as of right now, guys, it kind of looks to me like we could see oil push back here into the top of this channel, because what you'll notice is that off of these highs, right? We've got these highs back here and these lows. This is an equidistant channel. You can see where we didn't really test it back here, right? So we could come up here and test this area, retest these highs over the coming days into next week, as this market just churns higher following the reclaim down here at 78.70. So in my opinion, as long as we're holding on to areas like this, carving those higher highs and higher lows, this looks pretty bullish up here to retest this region, possibly the top of that channel. Now from there, that's going to be a big test for this market, to where obviously we could see the market rotate lower and pull back, right? Maybe even back here toward this inefficiency, but I don't want to get ahead of myself right now, guys. This is a buy on dip kind of market, as long as, like I said, we're following this market higher up here toward 90 and carving these higher highs and higher lows. Okay, so next up we have Bitcoin, guys, which last week, the crypto market went absolutely crazy. And look, this is a wild chart because this range right here lasted for months. Okay, so we saw Bitcoin go sideways back here, right, for months. And this 3 candle move right here basically went from just above 64 all the way up here toward about 80K nearly, right? So that is a crazy, crazy 3-day move from 64,000 up to $80,000 in 3 days. Just a wild move here from Bitcoin. Now, the key though, the key question for this market, or at least the key question I have for this market, and let me be clear too, guys, I have not traded this market. I do still hold crypto as an investment. So this is perfectly fine. If Bitcoin wants to rally, great. But I am not trading this market right now. It's way, way too volatile for me. I'm certainly not going to try to short it. So right now with Bitcoin here going into late August, the question that I have is, where do we close the month? Because if you look at this other chart here, monthly time frame, this goes back to 2018. And what you'll notice is that we have all these highs back here. Okay. This is once again an equidistant channel. And so my question right now is, we saw the month of July hold below. So the question now is this right here simply a move back here toward these inefficiencies? Because notice on the monthly, right? Notice this upper wick. Okay, so this upper wick from back here. So let's see, this was the month of May, right? So this wick right here, and in fact, you know what? I'm going to do something right here. I haven't done this yet, but I'm going to do this live with you guys. So looking here at this high down here to the low, the 50%, markets will often mitigate 50% of wicks or thereabouts. This comes in at 79,560. Now, if you look at the high here, right, what is the high? It is 79,500. Okay, so literally $60 away from the 50% of this wick. So look, I'm not shorting this market. Like I said, I'm not calling this bearish. But my question is, is this right here going to be where we close the month of August above the bottom of this channel down here? Okay, or is this simply mitigating inefficiencies like this back here, and then we move on to close this month all the way down here? And look, that might sound crazy, right, after the move we've had, but keep in mind this is crypto. Also keep in mind this right here, there's still over 10 days left, guys. So there are 10 days left, and we just saw the market go basically from here up to here in 3 days. Okay, so there's nothing to say that Bitcoin can't just close back below here in the next 10 days. Again, I'm not saying it's going to happen, but my point is just, be careful, because we are seasonality wise, we are in those months where crypto and even the stock market tend to not do very well. All right. So I do find it a little bit concerning that we're seeing this kind of a pump going into late August as we move into September. Okay. So again, not doing anything here right now. I'm not, calling this either way. Even the 1 hour time frame, there's nothing here that indicates bearish. Even something like the 15-minute, right? Nothing here that indicates bearish. I mean, this is just simply, higher high and higher low, right? Nothing happening here to make me think that we're reaching a top. I want to be clear about that. My only point here is that just watch the August close as we go into September. Specifically, if you want a number to watch going into that August close, really, in my opinion, if we look here at the monthly time frame, this is really going to come down to this area right here. So right around let's call it 68K, right? 67, 68K. This area down here is going to be the one to watch. Okay. So right around 68K as we head into the monthly close, that is going to be massive. If we close above, this starts looking like a deviation, and that could be bullish for Bitcoin. Okay. If we close back below, then this looks like nothing more than a mitigation of these inefficiencies, also a bull trap for the possible move lower. Okay, so just something to watch as we move into the August close. All right, so that's it for today's video. Keep it locked in here. Subscribe to the channel. Also check out that free SMC strategy right here on the screen. Click on that link, enter your name and email address. You will be given completely free access. So have a wonderful weekend. I will talk to you again next week.